What I think is really interesting is doing, some might call them catalytic investments, low return investments. Take Colorado, we have a housing shortage, especially in some of the ski communities. How do you build affordable housing? That may not produce a return to a typical real estate investor where they say that's interesting, but people will say, you know what? If I get my money back, that's a win. That would be a huge win. And if you have it in your philanthropic structure and you invest that money for affordable housing, you're having an impact with, call it the investable assets of that donor advised fund, and then you can get the money back. A grant would work differently, right? Because a grant, you're giving the money away to the nonprofit and then it's gone. They did something with it. But having more impact with the investable assets of the philanthropic structure, I see that as a trend that is different in my mind than ESG, sort of screening public investments to align with values. This is really, how do I take that money and have impact through investing? And you may lose it, but if you grant to a charity, you've quote unquote lost it too. Mm-hmm. So it's a way to experiment and do things. You already got the tax deduction. Why not try to have do some other things with those funds? So I think it's a growing area. I'd like to think on the decline side, inordinate focus on, again, expense ratios. I think it's valuable, but up to a point. But I think nonprofits get too much scrutiny around that. I think that's a misconception. So I hope that's a trend that be prudent, be thoughtful, take care of people's money, but understand that you got to hire talent.
This podcast is brought to you by B Micro, a company I'm deeply passionate about because I founded it in 2018. It's USDA organic freeze-dried microgreens for everyday nutrition and detox. Sprinkle them on any meal or take them as a capsule to enjoy the many healthy benefits. Shop now at bmicro.farm. Use code STEVE15 to save. Is that kind of a story of a couple bad apples kind of ruining the bunch? Maybe if from like a PR standpoint, there's a couple of nonprofits that maybe or certainly were maybe fraudulent with the funds, and that's what gets the headlines, and that's why it's such a narrative out there?
I think so, and I think people think about the sector. It's probably not just that. I think they also I think they think about the sector as, you're doing good. There's sort of more of a resource constraint on that, because the people are solving problems that, generally speaking, the market hasn't solved. So a company gets revenue and sells a good because people demand this. But certain things in the nonprofit sector, there's not really a market for. But it doesn't mean that you can't pay people decently and have them, and invest in infrastructure and technology. So I think it's part perception of the sector too, not just the bad apples. Mm-hmm. I think it's probably both.
Looking at some wealthy individuals, like the founder of Patagonia, mm-hmm. he had a very unique mm-hmm. way of structuring his business. Well, he gave away ownership to fight climate change. And then there's other owners that he was very close with, like the founder of North Face, can you speak to how some of these owners of big, profitable, successful companies are giving away or making a positive impact?
Yeah, I mean, that's one version. You also see others saying, I'm not going to take a tax deduction. I'm going to create an LLC, and I'm going to be charitable without leveraging the tax code. So that's interesting. An LLC is not
Why would they do that? They're like, we want to give the money to the government?
No, they want to be able to support things and not feel restricted about how they're doing it. Oh. Because again, someone might be doing good work. There's a lot of different reasons. Also, just if you have a private foundation, you're filing that with a tax return, so people see how you're giving. So you can maintain anonymity. That's why a donor advised fund. There's one benefit to it of several. One is sometimes donors want to be anonymous, not because they maybe they don't want to be, they want to give a gift and they don't want other people to know, or many people want to be very discreet with their wealth. Mm-hmm. There are a lot of people out there with a lot of wealth that are very discreet about it.
And if people know, they can become a target.
Well, yeah, and people start shaking them down and things like that. And so I respect that. I think, there's a criticism of donor advised funds that people are hoarding money, and we've seen more than 20% of these funds are given away annually. The money's irrevocable. Once you go into it, it's going to go to charity. So it's people want to take their time and be thoughtful. And I ultimately think we should be about encouraging, activating generosity. And if it's not on our time frame, it's okay. But I know nonprofits will say, I want the money now. So I get that. But I'm focused on, my business is focused on how to make it better and more delightful for donors and reduce friction. And I think downstream from that, nonprofits will benefit.